What's up, guys? I'm Nobody Special, and today there's absolute blood in markets. All the indices are selling off big time. As of the making of this video, the Dow is down over 1,000 points. So is this the big sell-off we've been calling for? I don't know. My personal opinion, it still feels a little early, although it's tough to argue with a 1,000-point down day. Now, that being said, I am not one of those buy the dippers. I am taking a wait-and-see approach right now, but I am watching a couple of things. My investment strategy remains focused on two things, and that is how to eat and how to heat. That is food and energy. Now, yesterday we talked all about what's going on in global food markets, so today we are going to focus on energy, in particular, natural gas. You ready? Hit it. Thank you for joining me. I'm Jack Gamble, and I'm Nobody Special. And look, folks, there is a lot going on in markets today, and everybody's wondering, is this the big sell-off or isn't it? Is this the big thing? Should we buy the dip? Look, nobody knows, folks. Can I say for sure that this is or is not the big sell-off? No, I can't. My personal opinion, it still feels a little early, but I'm not willing to bet the bank on that, so I'm taking a hands-off, wait-and-see approach. Right now, this is definitely turning into a stock picker's market, okay? There are some serious market headwinds going on. The indices want to move lower, which means you need to be right big if you're going to try to pick stocks right now, so you better make sure that the long case for anything you are buying is pretty strong. And to me, there's really only two markets that I see a bullish case that is really that strong, and that's the food and the energy market. And since we talked about food last night, we're going to talk about energy today, in particular natural gas, because natural gas is what's really driving markets right now. Now, before we get into these stories, I have to ask folks, could you please like this video and subscribe to my channel and hit that notification bell? It really helps me out, and I'd be forever in your debt. And I also have to see why my A here and say, folks, I'm not a financial advisor. This is not financial advice. This is only financial edutainment. You need to do your own research and your own DD, arrive at a decision that's right for you based on your unique situation. And now it is that time where we are going to shrink my big, fat melon of a head. And let's get into these stories. And folks, when it comes to natural gas and it comes to energy markets right now, the name of the game is geopolitical risk. Okay, there's just so much turmoil, or we are on the brink of turmoil in so many places around the world right now. That is what's driving natural gas markets. That's what's driving these energy prices. In particular, the situation in Eastern Europe involving Russia and the Ukraine, that's the big one to watch. And this is on Bloomberg today. European power prices jump on low wind and rising Russia tensions. Low wind output forces utilities to ramp up fossil fuel usage, and Russian movements near Ukraine add to fears of a gas shortage. German power prices for Tuesday jumped to their highest in more than a month as output from thousands of wind turbines across Europe's biggest market plunged. Near-term rates are now trading at their highest since the all-time high in December, leading to record energy bills for companies and many millions of homes across the continent. Governments from France to Italy have announced measures of how to compensate households just as living costs are soaring. Many businesses will not be able to operate profitably with the current prices and will either shut down production, reduce output, or pass on the cost to consumers, adding to the inflation burden, said Fabian Roningen, a power markets analyst at Rystad Energy in Oslo. Less wind output forces utilities to burn more expensive non-renewable sources of energy, including gas and coal, which increases the price of electricity. Wind output will be as low as 4,500 megawatts on Tuesday, compared with 6,200 megawatts on Monday. German day-ahead power prices rose as much as 58% to 275 euros a megawatt hour with brokers on Tuesday. That's the highest since December 21st, when it hit a record. And if you remember back in December, European power prices had just gone absolutely parabolic. Since then, we've had warmer weather set in, and a flotilla of American LNG tankers brought some supply relief. So European prices, although remain at historical highs, they've come way, way down from their all-time highs. Well, today they took a big jump back in the upward direction. Reading on, prices may have surged even higher if it wasn't for the mild weather. Temperatures in Germany are about 2 degrees Celsius above normal, according to weather data on Bloomberg. Now, that's just the weather end of things. Again, geopolitical risk is what's really going on here. And here we have European gas rises as Goldman warns of conflicts, risks to flows. Longer-term prices also surge on concern about Russia's movements on Ukraine's border could lead to an invasion. That might put Europe's gas supply in peril and push up the cost of running coal-fired power stations across the continent. German year-ahead power rose as much as 5.6% to trade at 129.5 euros per megawatt hour. Just to give you an idea what that looks like, here we're looking at natural gas futures. This is on investing.com. Dutch TTF natural gas hub, which is the benchmark price for European natural gas prices, at 92.60. That is up 17.25% on the day. And I just want to show you this technical chart here. You can see this huge spike back in December. Now, we've obviously come way down from there, and you can see this jump right here. We are down well off the lows from January. Now, again, when in doubt, zoom out. I have to zoom out on this chart just to show you folks what we're looking at compared to some historical averages. You see these prices just way above their historical highs. And we're talking by a factor of about 10 here, folks. These are not just up a couple of percent. These things have 10x. Okay, so major energy crisis still ongoing in Europe. And again, prices today up 17.25% in one day. So what is really going on here? Well, it seems like the saber rattling between Russia and NATO is getting worse by the day. Here we see NATO sending fighter ships to the region, UK to withdraw some staff from the embassy in Ukraine. Just this morning, the U.S. State Department urged all U.S. citizens to leave Ukraine immediately, taking commercial transportation. European Union aims to show united front and face what it sees as Russian aggression. NATO announced on Monday that it will send fighter jets and ships to Eastern Europe as tensions with the alliance and Russia hit a fever pitch due to the possibility of a Russian invasion of Ukraine. Denmark will sail a frigate to the Baltic Sea and send 4 F-16s to Lithuania. Spain's also sending ships to join NATO forces in the region and is considering sending fighter jets to Bulgaria. France said it's willing to send troops to Romania, and the Netherlands said that they'll send 2 F-35s to Bulgaria in April. Again, this is small movements, 1 or 2 ships here and there, a couple of fighters here and there, but these forces are all moving east towards the Russian borders as NATO builds up its forces in the area surrounding Russia and the Ukraine. But again, I just want to emphasize that these are not moving forces into Ukraine directly. NATO has stopped short of doing that, as that would almost certainly trigger the Russian invasion. Now, again, the big risk in energy markets here is that the Russians will absolutely shut off natural gas flows into Western Europe if the fighting breaks out. Now, there are some pipelines where the Russians have shut off their flows. And on this channel, we've talked about the Ural pipeline in the past, but there are still several pipelines that are delivering natural gas through Belarus or through Poland. And those are still running right now. And if the Russians decide to shut those off, Europe freezes because Europe is down below 50% in their storage tanks. So they're already running low on gas, and there's still 2 big months of winter left. So just in case that happens, what's going on? Well, the U.S. has been sending LNG tankers, but that is not enough to replace the Russian natural gas. And we saw this story over the weekend, Biden officials talking to Qatar about supplying gas to Europe. And of course, the irony here of that America will not build out its own natural gas and energy infrastructure, and now we're going to Qatar asking them to please sell some to Europe. That irony is not lost on me, but I digress. Putin could scale back or cut off supply over the Ukraine crisis. Some European countries fear Russia sanctions could hurt them. Biden administration officials have been talking with Qatar about possibly supplying Europe with liquefied natural gas if a Russian invasion of Ukraine leads to shortages, according to people familiar with the matter. President Joe Biden plans to ask the Persian Gulf nation's emir, Sheikh Tamim bin Hamad Al Thani, to visit the White House, possibly as soon as later this month. The meeting between Biden and the emir has been in the works for some time, a White House official said on Friday night. Some European nations have expressed fears that punishing Russia with harsh sanctions over the Ukraine crisis could wind up damaging their economies and prompt Russian President Vladimir Putin to cut off or scale back gas supplies in the middle of winter. Europe gets more than 40% of its natural gas from Russia, and about a third of Russian gas flows to Europe passes through Ukraine. Qatar is one of the biggest producers of LNG, just behind the United States, with about 3/4 of the fuel sold to energy-poor Asian countries, such as Japan and Korea. Qatar provides about 5% of Europe's natural gas. In Europe, shifting to LNG is critical for countries such as Lithuania and Poland that are looking to escape the pipeline politics involved in buying gas from Russia. U.S. officials want to help ease Europeans' concerns about how they'll heat their homes this winter. The U.S. has been stepping up pressure on Europeans to agree of a package of sanctions, showing signs of frustration at the pace of negotiations with and within the European Union despite weeks of talks. Putin has denied that he plans to invade, but is demanding concessions and security guarantees from NATO that the military alliance says it can't provide. All right, so the U.S. is now saying to Qatar, please, Qatar, will you pledge to sell additional supplies of LNG to the European Union along with America's own LNG to try to reassure the Europeans that they can weather this winter storm if the Russians cut off natural gas flows. But there is one thing that I want to point out to you, and here is a map of the Middle East, folks. And right here is Qatar. And do you know what's lying between Qatar and the trade routes to Europe? That is this little narrow passage known as the Strait of Hormuz. And I've been talking about the Strait of Hormuz a lot on this channel lately because the Iranians have been threatening to shut down the Strait of Hormuz to energy traffic, namely oil. A quarter of the world's oil flows through the Strait of Hormuz. But if the Qataris were to suddenly start selling LNG to Europe, Putin could put pressure on the Iranians to shut down the Strait of Hormuz, and that would immediately eliminate the Qatari supply of LNG to Europe. And I did a video last week all about how the Russians and the Chinese and the Iranians were doing joint naval drills in the area, all centered around practicing to shut down the Strait of Hormuz to international energy traffic. And the Middle East, as always, remains a hotbed. And this was just last night in Abu Dhabi. There was another Houthi rebel attack against Abu Dhabi. In this case, this was ballistic missiles were intercepted over Abu Dhabi. The U.S. State Department issues an alert. The Ministry of Defense confirmed that there were no casualties from the attack and that fragments of the ballistic missiles fell in different areas around Abu Dhabi. The targeted missile launch comes just 1 week after a deadly Houthi-claimed attack on Abu Dhabi that used what UAE officials said were drones and missiles. I just want to show you some of these videos that were found on Twitter showing the Abu Dhabi air defenses. These are interceptor missiles being fired from the ground at incoming ballistic missiles fired by Houthi rebels, or at least that is what this video is claiming. I have no way of confirming this. Not something you want to hear in your sleep at night. And again, going back to the map, here's Abu Dhabi right here. Here is Qatar right here. And here's the Strait of Hormuz. And again, the Houthi rebels from Yemen, they are Iranian aligned. So these Yemeni rebel attacks at the UAE are basically Iranian-linked operations. And again, Iran has been threatened to close down that strait. Folks, the situation in Eastern Europe could very easily light off and trigger this situation in the Middle East. Now, again, I think it's important that I CYMIA here and tell you folks that I am not a financial advisor. Again, this is not financial advice. This is only financial edutainment. I want you to do your own research and your own DD and arrive at a decision that's right for you based on your unique situation. But one way I have talked about investing in this energy trend lately has been through a company called Schneider Energy. Now, I just want to preface by saying I have not made any trades today. Again, I'm taking a wait-and-see approach to see if this is the big market sell-off or not. My gut tells me it's not. And here we have, over these last couple of days, LNG has just been brutalized. Now, we had made new highs up around 114, 115, and now we're just a week straight with this big market-wide sell-off. We've been absolutely crushed. Now, I don't think this has anything to do with Schneider Energy as a company with their specific story. This is all market indexes dropping and dragging this perfectly good stock down with it. And the reason I say that is because LNG is an arbitrage play. They buy U.S. Henry Hub gas for about $4 per million BTUs. They chill it and they ship it overseas, and they're selling it into Europe, which right now is trading around $29 per million BTUs. And these tankers are just money printing machines right now. Now, this company tends to sell most of its LNG through long-term supply contracts, but they do keep about 20% of their capacity available to sell on the spot market for at any given time. And right now, that 20% capacity that's available to sell on the spot market is bringing in money by the hundreds of millions. This company is going to absolutely destroy its next earnings call. It's just a matter of, again, you're swimming against the tide here, folks. You've got market forces dragging the whole indexes down. So not only do you need to be right, but you need to be right big. So again, this is a stock picker's market. And again, I have not made any trades today. I haven't changed my position in this company that I took out back in the fall, but I have not added to it. Another one I've been watching is XLE, and that is an energy sector ETF that invests in a lot of exploration and production companies. And again, this one, I have not touched my position today. I am down to about a third of my original position in this company. I was selling on the way up. I still have about 1/3, and you can see it's been a rough couple of days in XLE. This is another one I'm watching to potentially add to, but again, I have not made any trades today. Right now, I am just stepping back, and I'm not getting involved in these markets. Again, I am just taking a wait-and-see approach. Not sure if this is the big sell-off or not. My gut tells me no. So long story short, even though the market is still selling off violently today, there remain pockets of the economy where there's still a strong bullish case. And energy is one of those because of this geopolitical risk to energy markets that could send a lot of these commodity prices and a lot of these energy stocks significantly higher. With the situation in Eastern Europe, the situation in the Middle East, any one of those situations could really escalate and send shockwaves through the markets. And again, Even in bad times, people need to eat and people need to heat. So energy is one of those sectors that can somewhat insulate you from these wide market sell-offs, although from the look of those stocks that I just showed you, obviously the indexes are dragging those down with them. So let me know what you guys think. Is this the big one? Is this the big sell-off? Do you think energy and food is a good sector to be in right now? If not, where would you be? Obviously, precious metals is another one I'm watching. But again, I'm not making any trades just yet. Guys, I want to thank you for your time. Thank you for watching this video. Don't forget to give me a thumbs up, subscribe to my channel, and hit that notification bell. It really helps me out. Until next time, live small and dream big.